Hi, Mehdi Sunderji, and welcome to Your Finance TV's Crypto Revolution, where we cover all things crypto and digital assets. And crypto seems to be a bit of a hot topic at the moment. I think there are a couple of cheeky announcements that may have been made, and some would say they're historical, some would say groundbreaking, even. But we'll get to those in a moment. But before we do, don't forget to like and subscribe if you want to stay on top of our content. And I want to welcome back Mr. Adam Blumberg, co-founder at Interaxis. Adam, welcome back, mate.
Thanks to have me back, Mehdi. I mean, this is kind of a slow news week for crypto. I don't know if we're going to find anything to talk about.
I don't know. We say there's always something to talk about, but today could be a stretch. But it's been exciting times. We've all been over the last, what is it, 240 days probably. We've been banging on about the Bitcoin ETFs, and we're finally here. The approval came through yesterday evening, January the 10th, 2024, and it's all kicked off, and we're live now. So, Adam, there's a couple of things here. Why don't we break things down a little bit? Obviously, approvals are in. Everyone's now talking about things like the fees that are associated, who's involved with it, what was the dissension within the SEC. I don't think Gary Gensler's painted himself in the brightest of lights, the way he's messaged himself and the approval process. But I guess Hester Pierce came out with a statement as well. Why don't you talk us? I'd love to hear your thoughts on what you think, both around the Gary Gensler kind of commentary and behavior, and then Hester Pierce's statement.
Yeah, well, it was interesting, Mehdi, that what we saw was the vote was 3-2. And so the deciding vote was actually Gary Gensler, right? He was the pro vote for it. But it seemed like it was very begrudging, right? When we read the approval order, there's still talk of we are not, we're approving this ETF, but we're not necessarily approving or endorsing Bitcoin. So it was very begrudgingly. It was like they dragged him kicking and screaming. And because in that approval order, he talks about how Bitcoin is like they feel like Bitcoin still doesn't have intrinsic value like other metals do, even though they've approved ETFs for other metals. I guess he thinks that jewelry is a real intrinsic value for gold or something, or using it for electricity conduction, which is not really used for very much. But you and I both know gold isn't $2,000 an ounce because people really like to use it to conduct electricity. So it's really interesting that he kind of made sure that all this was in the approval order, that we still think it's used for criminal activity and people being able to hide their money and such, even though it's been proven that Bitcoin is the most traceable asset ever created, the most transparent asset ever. So it seems a little silly that that's still in there, that they're still kind of throwing that in there. And maybe it's a nod to his benefactor Elizabeth Warren, that he still wants that if this administration is going to stay in place, maybe he still thinks he's going to get that coveted Secretary of the Treasury position. But it looks kind of bad for him, although he approved this. Finally, he was on the yes side. I guess he realized that, as you and I have talked about over and over and over again, from a political standpoint, he really needs to be on the side of the Bitcoin ETF, especially when the likes of BlackRock, Fidelity, Franklin Templeton all jumped in the mix. During a major presidential election year, I think he realized I better be on the side of this, even if I get my little jabs in there here and there on the approval order.
Yeah, it'll be interesting to see how that bigger picture plays out for Gary because, personally, I'm not even sure he has a seat one way or the other, but that's just my two
Right.
cents.
Yeah, I
Um,
think he's hurt himself from a politically from a political standpoint for a while. The only thing, Mehdi, is remember, um, from Gary Gensler's perspective, and I'm not a political expert, right? But if Joe Biden wins the presidency again or maintains the presidency, then regardless of what we all think of Gary Gensler, Joe Biden gets to decide what happens. He gets to appoint those positions. So it doesn't matter that those in Congress, some like Patrick McHenry, who's actually leaving, and Representative Emmert, who is vehemently against Gary Gensler. It doesn't matter because the president gets to approve them. Now, you alluded to Hester Peirce's kind of scathing comments where she for years has been saying we should just approve the spot ETF. One of the, she went line, almost item by item and said, here's why we should have done this. We've hurt retail investors. We've actually hurt what people think of the SEC through all this process. We, she has said for a few years, look, we approved futures ETFs. Futures are traded. We have said for a few years, or many in the crypto industry and the Bitcoin industry have said for a few years that futures and spot pretty much track each other, and that was that was one of the reasons why the SEC has been denying denying applications for the last few years, as they say the futures market and the spot market are not the same. That's why we approve the futures. But now in the approval order, they say, oh, we looked at the data and they're almost identical. The futures and the spot market are almost identical. And she's going, I've been telling you that. We've been saying that. There was no reason for us to deny over and over because we're so afraid of the underlying asset. And so, yeah, hers was pretty scathing. And as you and I said, hers is a very American view in the historic American view, in the historic what America is supposed to be view, this idea of we're going to embrace innovation, we're going to move forward, we're going to give people choices. And what the SEC has been doing for the last few years has been very much a protectionist. We have to protect people from themselves. We don't like this new asset because it goes against the dollar, because we don't get to control the value of it, those kinds of things. And therefore, we're not going to allow an ETF out of it. And therefore, we're going to make up all these things about criminal activity and lack of transparency and all the things that we know are not there. But here we are. It's finally approved. The day has come, Mehdi, that you and I have said, maybe we get to stop talking about what happens if it's approved. And now we get to start talking about what happens after it's approved.
Well, certainly one thing I can do is scratch off. I had in my notes a headline that we were going to do this yesterday, that financial advisors are still skeptical that this is SEC approves Bitcoin ETF. So that was a headline on Bitwise, but I guess I can scratch that one off the list of conversations to have.
I'm pretty sure, like I know a lot of financial advisors. I'm pretty sure some of them are still skeptical that the SEC is going to approve it.
Maybe they'll
And
get their
you know
weekly.
what? Let's go back, Mehdi. As of what, Tuesday of this week, they have every reason to be skeptical because the SEC approved it and then they didn't.
That was a whole bit of a ball of fun in itself. But we're here, right? So now, moving forwards, what does it all mean, right? So now we're seeing assets that were sitting on the sideline, they're potentially going and being invested into these ETFs. There have been 11 or 12 ETFs that have been approved. We have, obviously you're going to have some rise to the top, some will kind of falter around the middle. We'll see what happens as time progresses. Now, my question is the biggest topic of the day is coming around the fees and such. Everyone's been racing to the bottom on fees. We're seeing some waive their fees for the first 6 months or until they reach a certain level of assets. Some are sitting there at 25 basis points, 15 basis points, 30 basis points, whatever it is. But they're all pretty small in regards to fee bases versus other ETFs that are out there. Apart from one, Adam. Grayscale, who's had Grayscale, the investment trust, which is now converted to an ETF, they've kind of had the biggest foothold in this market over the last several years, where they had the investment trust for Bitcoin. They obviously have Ether as well, but let's just talk and focus on Bitcoin. Now converted to an ETF, they have held their fees at 1.5%. Which is a magnitude of at least 5 or 6 times what most of the others are coming in at. What is your opinion on why they would do this?
My opinion, and again, I don't know why they're doing it, but here's my opinion. They have what, $26 billion or something under management there. Um, and and to move it over to the ETF and go from what, 2% to 1.5%, and collect that. I think what they're playing on is, one, people aren't going to convert very quickly from their ETF from Grayscale to another. I think they're going to be happy to be in an ETF. And this is what I think Grayscale is probably thinking, right? Is look, we can continue to collect our 1.5% for a while, as long as people aren't going to sell ours and move to another one. If people are in a taxable account, uh, meaning when they sell the grayscale ETF, I guess we're going to call it GBTC. I don't know what their symbol is, but when they sell it, it's going to be a taxable event for them. So maybe people are going to wait to sell it. And so in the meantime, Grayscale is just going to collect a higher fee. So they're not necessarily looking to bring in more money into the Grayscale ETF. They're just going, look, we're going to sit back and collect our fees as long as people aren't going to move out of our trust for a while, or aren't going to move out of our ETF for a while. And honestly, I think, Mehdi, they're just going to get acquired. Like they're just going to have someone like BlackRock come buy them, and BlackRock can buy it, and everyone will be super happy. Their fees will go from 1.5% to 20 bips, and they'll be perfectly happy with it.
It
Right.
sounds
So, and in the meantime, Grayscale is collecting a ton of fees, which, by the way, uh, Digital Currency Group kind of needs.
that
So
completely.
that's my thought on it. Is they're they're just sitting back and collecting their fees because people are relatively lazy. They don't have financial advisors. They just Most of us don't go fee shopping. And honestly, the only other cases probably where there are ETFs that are almost exactly identical is if you have like an S&P ETF, one that tracks the S&P or tracks the NASDAQ or something like that. And most individuals don't know to go fee shopping. They just think, oh, well, they're all relatively the same. Now, this is one that obviously has a lot more notoriety and such, but it might be a while. And look, at any point, Grayscale can lower the fees if they want to. But in the meantime, why not? Why not collect higher fees for people that are already in there?
You know what? I guess milk it till you can't. But it just seems quite egregious that
Exactly.
still sticking there at 1.5% versus their peers. But we'll see what happens in the longer term as all of this unrolls, and we're witnessing history in many ways, and it is kind of exciting to see how this all unrolling. And we'll
Yep.
fair the fact that me personally, I expected all this money going into the ETFs would just see Bitcoin prices continue to go because there's no real reason that I can see why anyone would sell it. And we've seen Bitcoin prices rise, and we've also seen Bitcoin prices come off as well. So, there's
Yep.
a lot of volatility coming into this. There's a lot of things to be understood, and we'll see how it all unravels. But
Yeah. You're right, Mehdi. And as you and I are talking here, it is January 11th. It is what is it? Almost 11:30 Eastern time. And we saw the price of Bitcoin shoot up this morning to over or almost 49,000. And as you and I are talking, it's about 46,000. Like you said, I don't really understand it. We've already seen record inflows, I believe, over maybe 2.5, $3 billion has already flowed into these ETFs, which is already a record. So I don't understand the selling really, but what do I know? I'm not a trader. It doesn't make sense to me, but that's all right. If I have some money available, maybe it's a good time to go buying Bitcoin because you and I both know the demand is going to continue to go up.
that's it. But we're not advising anyone to go and buy anything. We're just saying that it could be a good time. So everyone's jumping on the bandwagon. One of the points that I kind of wanted to raise was even the likes of Goldman Sachs. Obviously, everyone, we've got these ETFs that have been approved. There's a way for a lot of the banks and a lot of the other financial players to start getting involved. But Goldman has come in. They're talking to a lot of these bigger places like BlackRock, Grayscale, and I think a couple of others about being their authorized participant. Adam, what does being the authorized participant mean?
My understanding, Mehdi, is the authorized participants going to be the ones that are actually going to kind of be the market makers. So they're going to hold and trade the Bitcoin as needed, the underlying Bitcoin, the underlying asset as needed. And they're going to issue the ETF shares against what they have in custody. And then the ETF, the fund companies like BlackRock and such are going to go sell and market those shares. So their authorized participant, like in this case, JP Morgan, Jane Street, I think, is on for all of them. Those kinds of market makers are going to be the ones in the market holding, custodying the Bitcoin, the underlying asset, and then issuing the shares against it. So if there's anyone that's going to go in the market and be buying Bitcoin, it's going to be those participants. It's not going to be BlackRock, for instance. It's not going to be Franklin Templeton for their own fund. They can't do that. They have to have someone else uh, own the asset, own the underlying asset and custodying it, and then issue the shares for them.
So just to understand the flow and to relay the flow to our viewers, I guess I go in and I buy some of this BlackRock ETF. BlackRock will then go to Goldman Sachs, who will then go and purchase, or if I'm selling, they might sell Bitcoin, the underlying Bitcoin. They might go to a Coinbase and either buy and sell that Bitcoin through them as well. So there's a couple of different participants that are involved along the way.
Yep.
Everyone's obviously making their own little bit of commission, and and then probably they might be custodying with someone like a Coinbase as well, who's getting custody fees as well. So there are different players involved in all of these things. We're seeing a lot of volatility in all of these names, not Goldman necessarily, but the likes of Coinbase, the likes of Marathon, who's obviously on the mining side as well, and we're seeing it in the underlying Bitcoin as well. So it's a very cool kind of time to be watching all this and seeing how it all plays out and how it all settles down. So everyone's
Right.
getting
It's
involved.
it's so interesting because Mehdi, we've never had, I mean, to my knowledge, we haven't really had an asset like this that has been approved for an ETF, right? An asset with a verifiably scarce supply that can't go up. We can't create more of it. To see the market reaction, both for those that want to invest in the ETF, to see the market reaction to the price of Bitcoin, the underlying asset, which, as we said, is traded 24/7, 365 all over the world. This is new for everybody. Nobody can say that they knew exactly what was going to happen today in the Bitcoin market, in the ETF market, and quite honestly, in the rest of the crypto market, right? This is a day where some people said, the price will shoot up. Some people said it'll be a sell the news event. Some people said it'll be a big flop because, financial advisors won't want to put their clients into it yet. We had no idea. This is totally unique and interesting to see what's actually playing out and happening today that you and I have been, creating these theories on for months now. And then to see it play out, some of it, it's kind of like you. I scratch my head and I go, I don't understand why that's happening in the market. It doesn't make sense. But then you and I have to also go, the market's the market, right? Our job is not to try to, I mean, our job is to talk about it, analyze, kind of think about what might happen, maybe what should happen, but then go, all right, let's talk about what's actually happening and why it might actually be happening. This is one where I scratch my head. It went to 49,000, now it's at 46,000. Can't figure out why. But it's so interesting, Mehdi, because again, the probably the closest asset we've had, the closest ETF we've had is gold, but gold doesn't have a finite fixed supply. And gold is not as easy to necessarily go buy and custody and hold and everything. This is an asset that you and I can go buy some right now if we want to. I might do it while we're talking and see what happens. Maybe I'll drive the price up.
Well, it's also, who knows how these ETFs are structured, when they have to market and all these types of things. I don't know the exact mechanics around how they're done. Maybe they go in, at a certain period after the market. I don't know, right? As we say, Bitcoin is 365, 7 days a week. So, 24 hours a day. So they're not restricted on when they can do these things. So we will see if there is an impact on the price to the upside, which would reflect some of the assets coming into it. If not, well, we'll keep scratching our heads. So, not just Bitcoin, stablecoin issuer Circle. We speak to them on and off for USDC. They have issued an S1, which is indicating that they want to file for an IPO. So this is again, again the chain of things in this universe coming into the more legitimate, well, not legitimate, I want to say more recognized investment space. So if they come into the IPO world, what are your thoughts around this? Do you think this makes sense, or is this kind of weird and kind of going against the grain of decentralization?
The Coinbase IPO is
Circle.
oh, Circle. Sorry, yeah, too many C's, right? Too many C's we're talking about. No, the Circle, I think, was trying to do an IPO a couple of years ago. They were trying to do, kind of a SPAC kind of thing where they took on another, entity, another kind of dead entity. So this now is Circle kind of on the back on the heels of the ETF approval, trying to go public at a time when, of course, crypto has kind of come back. We've seen stable coins build up. We've seen more use cases for them. We've seen more and more companies actually say that they're going to start transacting payments. We've seen Visa, we've seen PayPal, which we'll talk about probably in a little bit. We've seen others kind of transact. You and I have talked about payments on stablecoin rails, so it kind of makes sense, I think, that Circle now is going, okay, maybe now we want to be a publicly traded company, and for this large stablecoin issuer who of course issues USDC against actual dollars that they keep in the bank, for them to be public is interesting now because now they're subject to the public markets. This is assuming that it actually happens, right? They're going to have to, be submitting all their documents to the SEC again, back to the SEC and approval for this. But they're going to have to submit all their documents. They're a publicly traded company. It's much like we talk about with Coinbase. We can feel a little bit more comfortable with it if they're publicly traded because they have all these regulatory requirements. They have all these transparency requirements. We have to know what's going on in their books, and I think it will give more institutions, it'll give more individuals, more people some comfort if Circle is a publicly traded company. Now, as you said, does this kind of go against the idea of decentralization? And the answer is yeah, it actually does. It completely goes against it. The idea of holding on to dollars in a bank account that is audited, or several bank accounts actually, holding on to dollars or dollar equivalents in several bank accounts that are audited, and issuing a cryptographic token against it goes completely against the idea of decentralization. But just like with the Bitcoin ETF, it's just a necessary next step to get more people, companies, institutions, governments, everyone on board with a more digitally native ecosystem, because we have to delve into something that feels a little bit more comfortable, right? And a dollar feels more comfortable. And it feels even better if we know that there's a dollar in the bank for every one of these tokens that we're moving around. And if the company that's issuing them is a publicly traded company that's regulated by the SEC and the US government, we feel even more comfortable with it. So much of what we're doing and we're seeing in DeFi and crypto is all about the level of comfort that the average person is going to have with the system, rather than the degens or the crypto OGs or the digital natives. For right now, it's about going to where there is a great deal of comfort with the regulatory process, comfort with my money, comfort with the protections and everything else. And that's what an IPO from Circle might give us with regard to USDC.
Totally agree. It's that comfort level, and it's the mentality that's never, well, not never going to change. It's going to take a long time to change. Where even today, I go and buy $100 worth of Bitcoin. It's up 20%. I'm going to say I've made $20 on it. It's not like I've made X amount of Bitcoin on it.
Right.
That just the phrasing is the mindset that's with most people here, unless you're in a country like El Salvador where you've started thinking in Bitcoin versus thinking in your local currency. But so we'll get there one day, maybe, maybe not, but we'll see. You mentioned PayPal. So PayPal had obviously issued their own stable coin, and it seems to have struggled to really make waves. But Aave's kind of getting, sorry, no, Paxos is getting involved, right? So is Paxos looking to buy that universe, or are they
No,
just
well, Paxos manages and issues the PayPal stable. Okay, so Paxos handles what's in the treasury that they issue PayPal stablecoins or PYUSD against. So Paxos is in charge of that. PayPal doesn't manage it, Paxos does. And remember, Paxos used to manage the Binance coin, the
right?
Binance USD. Okay, which obviously got taken away from them when Binance left the US and such. Now they didn't do a bad job of it. They did nothing negative, nefarious, or anything like that. It's just Binance and the US don't really mix anymore. They're oil and water, and so Paxos had to stop doing that. But they're doing it for the PayPal USD. So what we're seeing with Aave now, let's go back a little bit, Mehdi. PayPal issued this stablecoin, started issuing it, and it's those that are PayPal account holders can trade, they can send, buy, and sell from each other in dollars, they can do it in various other currencies, they can do it in Bitcoin, and then they can do it in the PayPal stablecoin, PYUSD. But the idea that PayPal wanted was they wanted to build it on Ethereum such that I could take it out of my PayPal account and move it to my own wallet. They wanted the PYUSD to trade freely on decentralized exchanges and such. Much like we talked about with Societe Generale in France that issued the euro stablecoin. They wanted it to be able to trade freely. So PayPal wants that to happen. But in the DeFi world, if you're going to take this stablecoin off of the PayPal network, it has to have some functionality. It has to be able to do other things in the DeFi world. Now, part of that is you have to be able to easily exchange PayPal USD for USDC or DAI or Tether or some other stable coins if that's the one you need. So if you buy something from me for $500 and you pay me with PayPal USD, I need to be able to take it off the PayPal account, move it to DeFi, move it to my MetaMask wallet or something. And maybe I need to trade that out for Tether or USDC because I want to do something with that other stablecoin. Now, what can I do with other stablecoins? I can deposit them into something like Aave and maybe earn 3 to 5% on it. Right. So what would I want to do? I would want to trade out my PayPal stablecoin for USDC and go earn 3 to 5% while it's sitting there. So what Paxos is trying to do and what they've proposed through the Aave governance is we want a pool where people can deposit their PYUSD so that they can earn 3 to 5% as well. And the vote actually ends today. So we'll see what happens today as to whether Aave allows PYUSD on their platform. And this is a vote among Aave token holders. This isn't like 3 people at Aave get to make this decision. This is Aave token holders. Any of them get to vote as to what's going to happen with this pool. But this is what we're probably going to see when it comes to banks or other companies issuing stable coins is they're going to have to go through these approval processes on all these different protocols and DAOs such that their stablecoin can be utilized within the DeFi ecosystem for everything that we think of in terms of DeFi, which is I want to earn interest. I want to be able to lend and borrow this stablecoin. Otherwise, it's not going to be as useful, right? It's not going to, it's useful for payments, but beyond that, people are just going to sell the PYUSD and take Tether or USDC and go earn 3 to 5% on it.
All right, well, let's see how that vote goes. And Adam, let's make sure we give a little recap on that next week to see how it all panned out. But
We
Adam,
will.
as always, it's been exciting, even more exciting than normal. And thank you so much for sharing your thoughts.
Thank you for having me on, Mehdi. Next week might be a dull week. Who knows?
It might be a dull week, but we might figure out what some of these moves are in Bitcoin by then. So, Adam, thank you for your time, and I want to thank everyone for watching. And you know what, RIAs who are skeptical about what's going on, make sure you sign up to Adam's course on digital assets and crypto education. It's interaxis.io because obviously you got it wrong. So it has been approved. So sign up and learn more about it rather than poo-pooing it. So, I really would genuinely urge you to find out more and sign up to the course because there's a lot more to learn about in digital assets. So please do that. Thank you for watching. And until next time, good luck investing.